Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. I don't care what your opinion of Charlie Munger is. I used to hate some of the things he said, but I found this piece of wisdom that hit me like a hammer, and I wanted to share it with you all. Charlie Munger explained, if you want to become rich, stop trying to be intelligent and aim for not stupid instead. In this age of artificial intelligence and everyone trading on their cell phones, this old-fashioned common sense made a lot of sense to me, especially after what we've been put through. After over 3 years in XRP, fighting the SEC, and at the same time in AMC, fighting the primes, the hedgies, the market makers, AMC senior management and its board, the financial media, I'll admit, I've learned a lot, but I'm never going to violate my trading rules ever again under any circumstances. If I buy something and it hits my mental stop loss price, I'm out. I don't even really want to trade in this regulatory environment anymore, where the elites get away with murder and regulators protect them while claiming they're protecting us. Guys, the most important thing coming out today is March's personal consumption expenditures, or the PCE index. That's the Fed Reserve's preferred inflation gauge. Many other companies prepare to publish their latest earnings figures, including oil giants ExxonMobil and Chevron. Also, keep a lookout for that shit bank Citadel bailed out with Steve Mnuchin, New York Community Bank. Let's hope they shit the bed in epic fashion. When it comes to our CEO, Adam Aron, I love to put things in order. Let's go back to January of 2022. AMC shareholders vote against CEO Adam Aron's $19 million pay package. Then in December of that same year, AMC's chief executive says he will freeze executive pay in 2023. Okay, then in February of this year, CEO Adam Aron attributes AMC stock's poor performance to an anemic box office. Not out-of-control short sellers, not non-existent regulators, not bankruptcy tweets or constant dilution announcements, not a blackmail scandal, just an anemic box office. Okay, Adam, would you care to explain Cinemark's success over the same time period? I didn't think so. And that brings us to yesterday. AMC Entertainment paid CEO Aron $25.4 million in 2023, a gain of 7.2%. But what happened to the shareholder vote against the pay package? What happened to the executive pay freeze? I think it's pretty obvious Adam Aron could give two shits about AMC shareholders nor what they want. Remember, this man's pay plan doubled even the year of the pandemic, exploding from around 10 million to over 20 million. This was the same time our theaters were closed for part of the year. We were being starved for movie releases by Hollywood, but it didn't matter to Adam. He and senior management were determined to extract as much money as they could from the company while it was struggling. I mean, that's what you do when your business is in trouble, right? Double your pay plan. Blow $250 million on green projectors. Blow $25 million on an in-theater commercial. Or invest $28 million in a previously bankrupt gold and silver mine penny stock. That's exactly what you do when you're over $5 billion in debt, right? Well, this little piece out of London sure got some traction on the Twitter AMC hashtag. Regulators told to be ready to handle failed clearinghouses. From Reuters, Regulators must equip themselves with tools such as bail-in bonds to deal quickly with a failed clearinghouse for stocks, bonds, or derivatives without having to call on taxpayers for cash. The G20's risk watchdog said on Thursday. After the global financial crisis of 2007 to 09, regulators mandated clearing for a wider range of derivatives, meaning they must pass through a clearer backed by default fund to ensure completion of trades. So, cryptocurrency analyst Credible Crypto said he intends to short Dogecoin within the price range of 18 to 20 cents. Now, this is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But I'm going the other way. I just went long Doge at 15, and I'll give you my reasons. In January, Elon Musk's social media platform X, formerly known as Twitter, announced it will launch a peer-to-peer payment system this year. I don't know if Doge will play a primary role, but given Elon's affinity for the coin, I believe it will be part of this project to some unknown degree. Musk said in an interview with ARK Invest CEO Cathie Wood that he would be surprised if it takes longer than the middle of 2024 to roll out the peer-to-peer payment system, so we may be within 2 to 3 months of a launch announcement. I'm long. Speaking of Cathie Wood from Fortune last night, investors yanked $2.2 billion from Cathie Wood's once mega popular ARK funds, even as tech skyrockets. Cathie Wood's star rose during the pandemic for well-timed bets in companies such as Tesla, Zoom, and Roku, but those same bets are now dragging her ARK funds down, and investors have withdrawn billions of dollars this year in protest. Funders have since January pulled $2.2 billion from 6 actively managed ETFs by Wood's company, ARK Investment Management, a major jump from the $760 million investors took out last year, the Wall Street Journal reported. Don't worry, guys. We're going to be seeing how much investors and institutions are yanking from our hedge fund friends real soon. Uncle Frank is watching and waiting. They can hide, they can lie, but they can't run. This is what I do now, guys. I watch our enemies. Pay attention. From 2 weeks ago, Goldman Sachs reports the largest selling of stocks by hedge funds in 3 months. Short sales. Now, 8 days ago, hedge funds sell off winning energy stocks to buy soaring oil futures. And then 8 hours ago, oil prices fall as U.S. business activity cools, concerns over Middle East ease. However they position themselves, I root for the other direction. It's that simple. When they're short stocks, I pray for rallies. When they're long oil, I'm hoping for tensions to ease in the Middle East and for oil demand to cool. And from Reuters, hedge fund borrowing hits 5-year peak. Global hedge fund borrowing rose to a 5-year high in the week to April 19th, a Goldman Sachs note showed, as hedge funds ramped up trading to take advantage of the first sharp dip in U.S. and European stocks this year. Banks give hedge funds leverage, essentially a loan to fund investing, which amplifies hedge fund returns, but can also increase losses. This is good news for me because when the hedgies are already leveraged up to 60 to 1, one serious mistake, one miscalculation, one swan, and you're street pizza. Now let's talk about hedge fund outflows or redemptions. That's when investors and institutions demand their money back, forcing hedgies to sell off positions. From 1 month ago, why this January was the worst for hedge fund flows in years. Then 1 day ago, hedge funds had good returns in February, but investors pulled money out anyway. And then from Fortune, Lackluster returns from Ray Dalio's key investing strategy lead investors to pull $70 billion from funds. You see where I'm going here? Less money coming in for the hedgies, more money going out, leverage increasing, debt or borrowing increasing, trades going against them, regulators and the press busting their balls. I'm looking for the perfect storm, or in this case, the perfect swan. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.